Okay, welcome to another weekly update of the market. This is November the 6th after the market closed on November the 4th. So we've obviously got the US presidential election on Tuesday. The results will be known on the market opens on Wednesday. So understandably, expecting Monday and Tuesday to be very quiet then. But, from Wednesday afterwards, I have a lot more clearer idea about the direction short term of this market. But let's just take a look at where we're at right now. I always start off with the very long-term chart going back to 1998. You can see the bull and bear cycles. And, if you were looking at this chart now, I think you would suspect that we're entering a new bear market, which has pretty much been my long-term prediction now since, for many months now, since my seminar in July. That is the New York Composite Index, which is like all of the stock markets in America blended into one. Why I have confidence in this is because it matches the global stock market, which is shown here. Very similar pattern going on there, which is, that's the whole world. And America doesn't operate in a vacuum, even though that's the one I'm looking at all the time. The distortion, I think, comes with the S&P 500, which doesn't look nearly as bad. In fact, until recently, I've been arguing that, no, this could be a lot of people have been saying this could be a step up to a new leg of the bull market. And it's understandable when you look at that. So this is why there's been a lot of confusion, and myself included, been trying to figure out exactly why you've got the disparity between the two charts. So I've homed in on the New York Composite, the NYA. If I go a bit closer up there, you can see what's going on here. These red and blue lines here, the moving averages, just the average price over 40 weeks, and the red one is 70 weeks, just to get a guide about, is the market, above average or below average right now. So if I home in a little bit more, this is just the last few years, and I've been commentating on this line here at around 10.520-ish. That was a line of support and resistance going way back here. And I said last Sunday that because of this break here, that was indicating further lows ahead this week. And sure enough, that's what happened with that down bar there. So this strengthens my confidence in seeing this chart of the NYA as being, the leader in over the SPX about what happens next. It seems to be a very reliable gauge in this cycle. That's what happened there. If I zoom into the daily chart here, day by day action, and here's the NYA, and as you can see, pretty much since I said I identified that break, the market, there's Monday, Tuesday, Wednesday, Thursday, Friday, the market really just didn't stop going down since I told you last week that there was that break of support. And you can see here, if I pull up the S&P 500, you can see how that was a couple of days ahead of the curve, because the S&P 500 didn't break until actually on the Tuesday. So it's a couple of days notice that the NYA gave you. What's different about the two charts now is that, as you can see, the S&P 500 is just hanging on to this key moving average here, which is the 200-day moving average, very important one. For the long-term direction of things, it's seen as, but the NYA is that's broken below it. So again, we've got this disparity. Which one is correct? And if the past has been any guide, as we've just shown you, the NYA could be the leader here, telling you what happens next to the S&P 500. Indeed, is the stock market attempting to predict what happens in the election? Short term, the stock market won't like a Trump victory because it's an unknown. That's the only reason why. So, is the stock market giving us a prediction here of a Trump win? We'll know on Wednesday soon enough. But the bookies are saying, bookies could be off again. The bookies are saying, I think it's at 70% Clinton win. So This could be another Brexit incident. What's different about this time is that the stock market is definitely not pricing in. It's not assuming it doesn't seem to be taking anything for granted anymore. But it is, from the S&P 500 point of view, hanging right on the edge to see what happens next. And at this juncture, I can't really say any more about the short-term direction of this market until we obviously can see the results of the election. What it looks like it's trying to say, though, is Trump victory. So we'll see what happens next. But in the short term, this market has got quite badly oversold. So if Trump wins, we can expect to see it probably drop significantly more, which really could usher in the start of the bear market in full motion. If Clinton wins, it's not going to go crazy, but we will probably see a short-term bounce here. Probably back up to here, and then it will have maybe into November, even December, before it, and then we'll have to look at it from that point on. So it's pretty easy to say what happens in the event of each outcome, but what the outcome is, the stock market's saying Trump win, which flies in the face of the experts and the bookies. So we will see. Speak to you next time.